There are improved services in the marketplace. We have personalized recommendations that make things seamless. We also even have some elements of fraud detection and all of that, because if we apply it correctly, anybody who operates in that area might leave some footprints that could aid fraud detection and all of that. Then we also have access to smart technologies via or in the age of AI. And AI-powered tools such as virtual assistants or chatbots make it easier for consumers to get information, solve problems, and perform tasks efficiently. We, however, have our concerns as a body. In as much as AI brings about efficient service delivery in the marketplace, it also comes with certain challenges. We note that companies may use AI to influence consumer behavior through personalized marketing that exploits psychological weaknesses and even maybe paucity of information. Let me say this, that when we talk about paucity of information, you would agree that one of the challenges we have in the Nigerian market is every business will give you what they call, for instance, maybe like terms and conditions for either a product or service. But one of the things we notice is this. Those terms and conditions can be overwhelming. Usually they are in those fine prints, very tiny prints that a consumer is unable to comprehend at a very short time. So when that happens, consumer choice can be impaired. And in the age of AI, such challenges are bound to be more, because you're working with speed. You are in a situation where in a few seconds, you need to take a decision, make a decision. You need to make your choice and all of that. So we are worried that companies would exploit consumers by not providing them with enough information that would enable choice. Also, regulating AI can be challenging because traditional rules are often too slow to keep up with rapidly advancing technologies. Like it or not, the rules that are in place, extant laws and regulations that are currently in place, are traditional in nature. We are yet to keep up with the speed of AI. So that's one basic challenge we have. The other challenge is that AI operates across borders, such that one of the good things is that the Federal Competition and Consumer Protection Act, for instance, makes it possible for us to operate and collaborate with sister agencies across borders. So that gives us some comfort. But let me say quickly that to reduce AI risks, we would urge businesses to follow ethical practices, ethical and best practices, such as in the area of transparency, fairness, and accountability. We are, as a commission, working seriously to address AI issues, particularly through consumer education. We have currently a school program that we're running to address and catch them young. We also are coming up with some specialized campaigns that would address AI. But finally, what I would like to say is that for all of us to be beneficiaries of AI, particularly in this age, we would urge businesses to apply AI to complaint resolution. We discovered that even banks, maybe very big banks, do not even have specialized desks for complaint resolution. So we would advise that AI can be applied in that direction, such that complaint resolution will become timely, and not just that, also very effective. Because with AI, we can harvest all of this and manage situations very well. Thank you very much.
Please can you put your hands together for Mr. Ondaje? It's very particular with that, and I can understand. Thank you so very much. That's from FCCPC. I want to assure you that I'm your friend. And ladies and gentlemen, I would like to quickly introduce or welcome Huawei. Do we have Huawei for the presentation? If we don't have Huawei ready, can I have Zach Bijesi, co-founder and CEO of Matcha, as they come up to make their presentation, please, quickly? Huawei, okay. All right, thank you very much. Please, can you put your hands together for him? He has 10 minutes for this session. Is it? I'll use it. Yeah. 10 minutes, please. What's the time? All right. Is it possible?
All right, thank you. Good afternoon, everyone. Yeah. Thank you to Fintech Nigeria for the opportunity to have this session. I'll be taking us through this topic, unlocking business values with our partner in fintech sector. Inlax is a partner to Huawei, as well as on the cloud solution platform. So I'll take you through an overview of Inlax, who we are shortly, and then share our fintech suite of products, our fintech platform and technology, and as well as talk about our Huawei partnership. Next slide, please. So this is our commitment to our customers. We seek to unlock business values across Africa today and into the future. We have 3 business units. We have the financial business unit, infrastructure business unit. We have the software development platform unit. We are an organization of 500 members of staff. We are spread across 4 regional offices in Nigeria, Kenya, Ghana, and Cameroon. Next slide, please. Okay, here is our footprint across the Africa region. We are in Ethiopia, Ghana, Kenya, Liberia, Sierra Leone, Gambia, Cameroon, Tanzania, Zambia, and Rwanda. We support 8 central banks across West Africa. We service 29 commercial banks and over 100 microfinance banks and fintechs. We are also in Guinea. We are in Benin Republic, Democratic Republic of Congo, Cote d'Ivoire, across the West Africa sub-Saharan region. Next slide, please. Here is our clients in Nigeria, just a select few, the likes of Access Bank, Eco Bank, Fast Credit, FCMB, Central Bank of Nigeria, Premium Trust Bank, and the like. Next slide, please. So the financial business unit in our financial services sector, we have our core banking suite of products. We also have what we call our complementary solutions, the enterprise suite of products, and our custom software development unit, which is essentially our fintech arm of our business. Next slide, please. So for the core banking applications, we have the core banking suite. We have financial crime mitigation. We have our channels, our digital banking suite, treasury solutions, data analytics, and our cover system. On the complementary suite of products, we have our ESB platform, enterprise risk management suite of products, our enterprise fraud management platform that we offer to the banking financial services industry. Under the enterprise solutions, we have the document management system, workflow management system, converged infrastructure, managed services. Under this enterprise solution falls our Huawei cloud solution offering that you will see shortly. We have our custom software development suite of products that covers application design, customized reporting, system integration, software testing, etc., etc. Next slide, please. Here is our digital payment suite of products. We have our dormant accounts management, agency banking, digital loan origination, mobile and internet banking, accounts reconciliation, what we call paperless banking suite of products. Next slide, please. Here is our software development arm of our business. These are fintech arm of is that we aggregate software developers to come up with solutions, fintech products and platforms for the banking and financial services industry. Next slide, please. So here is the Rivet suite of products. We have the fintech ancillary services, basically our payments and fintech platform. We have EduTech, our Skilldom, suite of products. We have e-government solutions for audit follow-up, recommendations tracking, system, etc., etc. Next slide. Here is our footprint on the Huawei cloud. So we support everything that is Huawei cloud. We have the expertise as far as Huawei cloud solution offering is. We do migration services. We have joint solution on Huawei products that we are offering the banking services industry, as well as local support. Next slide, please. Here are some of our customers that we just did some cloud migration project for on the Huawei cloud platform. Next slide, please. So why Inlax? Why us? We have an effective organizational resilience structure. We've been in the industry for a while, in the banking and financial services industry. We are technically competent in terms of skilled technical expertise across the region where we support. We have a good understanding of the financial services industry in Nigeria and across the region where we have our business and operations. We are strong financially. We've done projects of $2 million, $5 million, $10 million and above. Okay. And we have a strong presence in Africa across the region where we support. Thank you very much.
Thank you so very much, sir. I gave you 10 minutes. You're giving me 5 minutes back. That's quite benevolent of you. All right, please, can you put your hands together one more time for Huawei and Inlax? The next speaker will be coming from Acha, and that is Zakam Big Data Network in Nigeria. Please, can you put your hands together for him? The more you clap, the more successful you will become. Yes, that's way. Thank you. Where are my ushers? Please, can you direct my speakers on where to follow as they come up? He'll be speaking for the next 5 minutes. Do you want to use this? Or do you want to use your hand?
Testing. Yeah, it's fine.
Okay.
Hi, can you hear me? Good. I'm Zach, co-founder of Archer. We are building a fraud data network in Nigeria and in Africa. So I used to run a digital bank in Nigeria where we gave loans and we gave the ability to send and receive money for small businesses, for merchants in Nigeria. We gave 36,000 small business loans in Nigeria, not just this island or Lagos, but throughout the country. We had a lot of success with the loans at first, where we had a collections rate of 97%. But there was a big problem. The lending and fintech products in Nigeria at the time, not just at my company, but everywhere, were so risky that you had other companies losing a ton of money, or us who it was just hard to even approve customers on time. there is no way to actually trust whether a new customer is a good actor. So what we realized is that we need more access to data on new users coming into companies. When a user goes and signs up on a fintech platform for a loan or for to access a POS device, whatever they want, they could be a great business owner, but the fintech doesn't know that. With our fraud data network, we can see is a company or a user signing up for a platform, are they associated with bad activity at other companies, or are they good folks just signing up and trying to get financial services so we can approve them quicker? So at Archer, we started in Nigeria, where I went to a bunch of fintechs that I used to have as competitors. And I said to these competitors, hey guys, all of your fraud concerns, I remember them because I used to have them too. And you're all alone. You're all fighting fraud in a silo. And the fraudsters are not in a silo. They're all working together to scam you and to scam your users. You know what's funny is I've been in now, and whenever I travel to another country, I say, hey, I work in Nigeria. What do you think that the people say to me? They say, oh, Nigeria. They say, do you know a Nigerian prince? And they're just joking. But I say, yes, I do. My good friend Prince Yemi, actually, you should meet him. He's a good guy. And they get confused because people don't realize that scamming in Nigeria started with scamming other Nigerians. Scamming in Nigeria is not because everyone in Nigeria is a scammer. It's because Nigerians are audacious, outgoing people. So if some bad actors become scammers, the whole world is going to find out. Whatever a Nigerian will do, they'll be the best at it. You can applaud for yourselves. It's okay. But unfortunately, there is now a reputation associated with Nigerian scamming. I think it's completely wrong. And I think the biggest victims of any scamming is Nigerians themselves. We also know that the scammers and the fraudsters evolved over time. They're not using Yahoo email addresses anymore. They have sophisticated ways of scamming you, scamming banks, scamming your auntie, scamming your mom. And everyone's helpless against it now. We're all just afraid and not knowing who to trust. So at Archer, what we've done is we have started connecting the financial services companies in Nigeria so we can detect suspicious behavior. We can block it, and we can protect your loved ones from getting frauded, sending money to scammers or having their accounts stolen from other people, and whatever other kind of fraud these guys come up with that we haven't even thought of yet. Anyway, so that's Archer. We're building a fraud data network for fintechs and banks in Nigeria because we'd like to make more money together and have a little bit less wahala. Okay, thank you.
Thank you so very much. Our Nigerian Oyibo Prince. It's good to have you. All right, ladies and gentlemen, we're going straight up to the next panel section. If you want to have details of the speaker's bio, kindly just scan the QR code here. It will give you insights and inroad to all of that. Quickly, I am so excited that the moderator of this panel section is one of my ogas at the top, and it gives me great delight to please introduce and welcome the CEO of Intermark Consulting, Mr. Adeyinka Adeyemi. Please, can you put your hands together for him as he comes up to take up his seat? He will be moderating this section of my ushers. Please, can we have Mr. Adeyinka Adeyemi, the CEO of Intermark Consulting. And then we also, that is Kabetse Quintin Guamulumba, Director for Better Clean, will be joining online. But we also have Temitope Ajanaku, Group Chief Finance Officer, Express Payments. So please come up. Please, can you put your hands together for her? Great. Okay, now I see why you're always with Madam Maki. I see that it's a familiar family that is working as a case may be. And my moderator is going to direct us accordingly. Mr. Benga Pasada, Pasada, I hope I got that right, the Managing Director of VFD Tech Limited, will be joining us as well. And then I know that I have Managing Director Nigeria at Network International, Madam Lola Agbebi. She just walked past me, knowing well that she's also on this panel. It's good to see you again. It looks like it's every other year we keep seeing ourselves in all of these events, but it's a good thing. You're welcome. Can we have Efemena Ogie, Head of Partnership at Moneypoint as well, joining them on the set? Please, can you put your hands together for Mr. Efemena? Moneypoint is really minting money these days. Thank God that your ATM machine or POS machine is always reliable. Only one password, we get our money. Thank you, Moneypoint. And this will make up the panel section. Please, my team, technical team, can you confirm the online participant, as the case might be? They will be joining online, I think, all the way from Kenya. And this session is going to run for 15 minutes, all the conversation and question and answer. And so I'm going to hand over to one of my ogas at the top, Mr. Adeyinka. He's making sure the gender is well balanced. Okay, please, can you confirm your mics are on? And then please take it closer to you and speak into the mic so that we can hear you clearly. And then this session is going to run for 50 minutes. Oga Adeyinka, I'm handing over to you now, sir.
You're okay?
All right, good afternoon, ladies and gentlemen. You're welcome to this session where we're going to be looking at the topic prioritizing profitability and cash flow in profitability and cash flow in Africa's fintech startup. I'll allow my panelists for this session to introduce themselves. From the far right.
Okay, good afternoon, everybody. My name is Efemena Ogie. I have partnerships at Moneypoint. Thank you.
Good afternoon, everybody. My name is Tim Tokwajanoko, CFO Express Payment Solutions Limited.
Good afternoon. My name is Lola Agbebi. I'm the Managing Director for Network International Nigeria.
All right. Thank you very much.
My name
is... go ahead. Go ahead.
Okay. My name is Benga Basheda. The MD at VFD Tech Limited.
All right. So we have 5 panelists for this session. Like the MC announced, one of our panelists will be joining online. I don't know. Can you confirm if Quintin is online at the moment? Can we confirm, please? Is Quintin online?
Good afternoon. I'm online. I can hear you very clear.
All right, Quintin, if you can hear me, can you introduce yourself quickly?
I don't know if you can hear me. My name is Unkabeti Quintine Ngomlumba. I'm from Botswana. I'm the managing director for a company called Better Clean. We do financial fintech consultation. Thank you.
All right, thank you very much. We'll go straight into the business of the day. Just for a basic understanding of how this is going to run, we'll have 3 sessions or 3 rounds. For the first round, the panelists are going to just give their opinion on the topic, prioritizing profitability and cash flow in African fintech startups. Just their opinion and what they think, the status quo is and how fintechs can do better with profitability and cash flow management. I'm going to start from my left, Benga.
Okay.
Good afternoon, everyone. Once again, I think one of the most critical things in this period, especially as we are seeing some movement in terms of thinning out of funding for startups and investors looking for people who are solving more problems, right, rather than reinventing the wheel. It has become very essential that startups begin to look at ways to remain sustainable, ways to build for the long term rather than building flash in the pan businesses, trying to build to bleed scale rather than building um, to be sustainable or just for the long term. So I think this will be my preamble, right? We will get further into this as we go along. Thank you.
Thank you very much. Can we go to Lola?
So I think that in the last couple of years, there has been a boom. However, that boom is now being restricted. And I think it just goes to show that there has to be more innovation happening. There has to be economies of scale in when it comes to fintech startups. And I think that investors generally just want to see more innovation, more competition. They don't no longer want to fund mere ideas. I think people are getting wiser and they want they want fintechs to show them that this there will be sustainable. So I think that is what is happening with the crunch, apart from some other economies, what do you call it, economic instability. However, I think at this panel, at this session, we'll get deeper into things.
All right, thank you very much, Lola, for those thoughts. I'm going to go to Temitope.
Thank you very much. So I think from my perspective, if you look at it now, in like she said, the boom 2 years ago or 3 years ago, rather, you had the boom, people raising funds VC wise, but now the inflation, the uncertainty politically, it's meaning now that the funds are not as readily available as before. So it's very important for fintechs to, unlike before where the focus was growth at all costs. So you see people coming to, you start a new fintech and you don't care what the cost structure is in the industry. You just want to grow. So you're giving everything for free, as an example. That has to change. Focus now has to be on profitability, has to be on how do we grow that product for the future for sustainability? Because if you are not able to grow that product now, you will not have the cash flow to continue in business. So hence you see why a lot of fintechs also suddenly they start up and then 6 months down the line, 1 year down the line, you hear, oh, we can't continue because funds. So yes, it's very important to stop the ideology that as a new fintech, it's growth at all costs. You will get there. Everything happens gradually. So yes, the focus needs to now be on the product itself and how do we grow the product, not just growing the business name as it was. That'll be my own.
All right, thank you very much for that. Ife, please.
Okay. Thank you very much. I think from what we've seen so far, there has been some like a downward spiral with respect to venture capital investments, in fintechs in Nigeria. And this trend, right, is not going to disappear just soon. Why? Because these investors, they want to maximize returns. And globally, we see that inflation is rising. And then to arrest that, countries are now increasing interest rates. And so when they increase interest rates, what happens? Investors want to invest in money markets. So why should I have a money market that has a high interest rate and I want to invest in a fintech startup? So this behavior, this trend is something that is expected. And so fintechs generally in Africa, they need to take a step backward and begin to prioritize the process of value, which includes things like profitability, cash flow, adequate cash flow, right? Sustainable growth, return on on assets, positive return on equity, and of course, optimal gearing. So what this means is the fintechs in Nigeria, across the country, the continent, they need to begin to invest wisely such that you are able to create value for your customers. You are solving problems for them. Once you do that, the sky is the limit. I think I'll end here for now. Thank you.
All right, thank you very much for those comments, everybody. I just wanted to summarize, if you like, just to set the tone for the if you have an understanding of where the fintech industry in Africa generally and in Nigeria in particular started from, you will find out that there was a lot of interest from venture capital, companies who wanted to invest because they believed that Africa, generally speaking, was the next frontier for growth in terms of, technology, in terms of the market as well. And so we saw a lot of investments coming into Africa generally, but of course, mostly into Nigeria. And that went on for a couple of years, 5 years, 10 years in the maximum. But in the last 2 years, we've begun to see a bit of decline in those sort of investments. What that says to us as practitioners in the industry is that, yes, we have produced a couple of unicorns, even in Nigeria and in Kenya and some other parts of Africa. And this was a result of the influx of, mostly foreign capital. But then the game has changed. We find that the space is now getting into maturity, right? And so the new startups need to understand that it is no longer business as usual, like we like to say. The name of the game today is sustainability, like we put it. Sustainability can only be achieved when you run your fintech as a business, for profit business. That means that profitability is key. That means that your cash flow management is key, right? Mm-hmm. Now, if that is the case, how then do you evolve as a profitable business using different, approaches and methods to get into that, space? In the earlier regime that I described, when there was influx of capital, the name of the game was valuation. The moment, the venture companies see your strategy and they see that, yeah, you could, maximize those opportunity markets, they begin to get attracted, right? But we're saying that now is a new turn of events, and fintech startups that will succeed must then begin to look at their business from the point of view of how profitable am I, what's my cash flow method of management system, and that is why this panel has been set up. Again, good evening. Now, I'm going to go to the second round of questions, and I'm going to start with Lola, and then I'll go to Temitope, so please get ready. Or should I start with Temitope and go to Lola? All right. Lola, in terms of strategy for the fintech startups that we have around Africa today, and of course we know that the business environment across Africa typically is not too different one from the other. What would you recommend as an aggressive growth strategy for the startup community in terms of how to quickly scale, right? Don't forget that we've said maybe venture capital, the time is not now. Maybe, profitability and so on is what we should look at. So what strategy do you suggest that startups should adopt getting into this game now?
I think I'll carry. Okay. For any business to succeed, you obviously must have a business model. And your business model, what you really want at the end of the day, you want good corporate governance. That is very key. Any business today, whether it's in Nigeria as a startup or anywhere else in Africa, without a very good corporate governance, honestly, you have a long way to go. So that is very key. Having a minimum viable product and doing your research, your market research, and making sure that you're solving a problem in the market. Honestly, that means you're putting your product out there and you know that your product is needed and you're solving a need. That kind of business will run a sustainable model. Also, when you talk about funding, now that we have said that venture capital funding is on the low, there are other ways you can finance your business. You have debt financing, you have venture debt, you have convertible notes, just different other ways. You can look inwards. You have peer-to-peer funding. So when you have your funding, I think that you need to understand that what you're looking for is a long and sustainable product and business model that will keep your customers coming back. And there are many other models you can introduce premium, where you attract people to your platform. You give your base product free of charge. And then when you know you have enough people on your platform, you start to apply a premium. That way, you know that you are catching and you're attracting the people that you want to go along with you on a journey. So the most important thing is that you need to have a good model strategy and it has to work. And you also have to look inwards and make sure that you are solving a market need. Because if there's no need for your products, that's the quickest way to that. And again, we know that regulations, the economic environment is unstable. However, if you look towards the challenges and the problem that you're solving, you know that people will always come for your products. And once they come for your products and it's affordable, then you are in there for a long run. So that's what I would say. Your corporate governance, having a minimum viable product, doing your market research, making sure that you're also focusing on operations and resources, good people, good compliance people, good legal people, so that you don't run into regulatory issues, because that in itself, can either deter or enable you. That, for me, I think will give you a sustainable business.
Right. Thank you very much, Lola, for those comments or nuggets. I mean, from your feedback, I hear suggestions such that steps should look internally, focus on your governance, focus on a sustainable strategy from your business model, which means that you're coming with a deliberate approach to business that will make you stand out. And we take all of that on board, and I'm sure you do as well in the audience. I'd like to go to Tebitokwe now, and I'm going to be asking around funding and investment. So the question will be, how would you suggest, or what would you suggest for fintech startups in terms of how to manage investor expectations, right, while focusing on profitability, not narrowing down on profitability? How should they, manage investor expectations while focusing on profitability?
One of the biggest mistakes that fintech startups make today is because, and I think it comes out of desperation for wanting that funds to come, because you have an idea now and you need money to get the idea to the next level. So what happens is, when we go and pitch to an investor, we are lying, not deliberately, but we are not lying, but we are hiding information. So you're not communicating clearly, you're not being open, you're not telling the investors the pros and cons of the business. So what happens is this investor comes, listens to your beautiful idea, which by the way is a lovely idea, but you've not tested it out. But he's hearing it, and all he's hearing is, oh, I'm going to give you X amount of money. In 2 years' time, I'm going to get X amount of money back. So what happens is the expectations are really higher than what you can even deliver on. So pressure has started before money even comes. So the most important thing to manage your investor expectation, you have to communicate and you have to be as honest as you possibly can. What that does for you is in the process of trying to be honest to the investor, you're being honest to yourself as well. Because now you have to have a cost benefit analysis where you're putting, okay, this is what I'm going to put in, this is what I need to do, this is what I'll get out of it.
Yeah.
At the end of the day, sometimes you find out that by the time you finish the analysis, you don't even bother yourself anymore because you realize there's nothing there. But when you do get to the end where you think I have something here to sell, you have to make sure that your investors know exactly what they're coming in for so that they don't come a year from when you've given them funds, when you are still research and developing in your office and they're asking you for returns. So the most effective thing is you must be very open when you are open. And when you do get that money now, speaking to remaining profitable, when you do get that money, you cannot afford to be wasteful. It's so easy to see. And the truth is, if we say Nigerians don't have the concept of money or the concept of numbers, we easily say $1 billion, $2 billion.
Yeah.
But do we really understand what $1 billion is or what $2 billion is? We don't have that concept. And what happens then is I have gone to an investor, I've told the investor, I need $1 million to make my business go. To the VC, it's small money, right? He gives it to me. But as a Nigerian, that is convert it. That's a lot of money. That's hey. So what you end up happening is because I don't have a proper plan, I see the money, and the first thing I'm thinking of is our company needs a private jet. Then after that, you're like, okay, but you've done all this wasteful spending. You've not focused on what you really need to do to grow the business. So it's very important that while you're convincing the investor, you're telling the truth to the investor, you're giving him all the pros and the cons, and you yourself have a very clear plan of how you want to focus on the product, grow the product, take it to the next level for profitability and sustainability for yourself and the investor. So that would be my take on that.
Is this an African problem where we lose focus when there's cash on the table?
I don't want to say it's an African problem. I think it's more a human problem because the truth is we all say, oh, when I get, it's so easy. Do you know how many times I've dreamed to say, Kai, if I have $1 million, what I'm going to do? But the truth is, test yourself with small money and see what you do. So it's a human problem. We think we can handle it, but we really can't handle it when we see the actual numbers.
If you're not African and you're in this audience, you've heard the feedback. This is not an African problem. It's a human problem. Please go and remember that at all times. Let me turn to Benga for now and then ask, in terms of looking at partnership and collaboration within the African fintech, startup space, how do you think startups can take advantage of, collaborations and partnerships to improve cash flow?
Thank you very much, sir. I mean, this is a topic that is really interesting to me because the nature of my business requires that I run a lot of partnerships. And for us, right, what we've done in terms of partnerships is if you look at what it does for you, right, it helps you to very quickly gain access to markets that you cannot, I mean, like you wouldn't ordinarily have been able to get into, right? You can get into structures, into means of earning revenue that are probably not even primary to your business. So if you want to grow your business, right? I mean, a lot of people talk about cross-selling and upselling and layering on other products so that they can maintain cash flow or grow their business or grow their size of finances or revenue. That is one way to go about it. And entering into partnerships with bigger players. I mean, just this week, I had a conversation with a technology provider who was thinking of how we could work with them to also introduce new products into the market. I mean, for those kinds of relationships or those kinds of conversations, ultimately becomes a win-win for everybody, where you can look at what are the areas of synergy that you can harness and find to then create value in the market. These areas of synergy can very quickly become opportunities to earn big money. I mean, payments in itself, which is what a lot of people are doing, payments has very thin margins. The only way you can start it is layering other things on it, right? To do, I mean, I've had conversations around people talking about, let's add insurance, let's add this, let's do this. All these various partnerships can help you scale your revenue, right? As a business, one thing you need to be looking about if imagine my primary business will give me X amount, what do I need to do? Which relationships do I need to create or pursue to be able to start getting value that I would ordinarily not have been able to do by myself? In some cases, you might be able to also but I mean, when you go together with someone, you can get there faster. I mean, there are lots of wise quotes around things like that, right? So you can't overemphasize the importance of partnerships. And I think it's important for everybody who wants to do real business to pursue those kinds of opportunities.
Great. Thank you for that. Our online panelist, I hope he's still connected, but I'm going to come to very quickly after I've taken FA on the question. Please let's make sure that Quintin is on standby. Now for FA, I want to touch on regulation or the regulatory environment and how this, positively affect the issue around, helping startups to focus on, profitability, or if you like, management, internally. I mean, there's so many talks around compliance and of regulatory frameworks and even laws. So how do you think the regulatory environment in Africa, maybe using Nigeria as a case study, is positively or negatively, impacting on this topic?
All right. Thanks so much. So first of all, let me just emphasize that regulation is a necessity to ensure a very efficient and secure payment or financial system. Having said that, the way you handle regulation can either make or mar you as a fintech. Now, this means as a fintech, you need to understand regulation. You need to understand the direction, the vision, or the objective. The question is, how do you even understand or get to know the vision of the regulator? I want to use Nigeria as a case study. So today, all the circulars that the central bank, issue out respect to the fintech industry, all the pronouncements actually drawn from a strategy document that has been put in place some many years ago. Now, I want to refer you, for example, to the Bank of Nigeria Payment System Vision 2025. Right? This work is currently happening in the ecosystem. And so it is important for you to understand what that strategy is all about, right? Because the regulations that will be coming up will be drawn from that strategy. It's a document that talks about global, trends in the payment space, such as, open banking, what's it called? AI, right? You have things like cyber security. You have things like contactless payments, okay? Digital identity. So these are things that you need to understand. And when you get to understand this, it will begin to guide the way you carry out your operations. I just some few weeks ago, I stumbled onto somebody that's a fintech that has built a digital address verification solution such that I want to onboard a customer, right, at a financial institution. I don't need to send my staff to a very far place to go and do address verification. These guys have built a digital address verification solution. And guess what? The CBN, there is the CBN customer due diligence regulation. Section 7 and 14 of that regulation allows digital address verification, right? So if you don't understand the regulation that we have, you may not be able to scale. For example, again, we have cashless policy provisions in that strategy document. But again, the CBN just announced recently that the amount of money in circulation is about 4.1 trillion naira. And 93% of that is cash in the hands of individuals and businesses. What does that tell us? It tells us the mind of the regulator. And then this is a major problem for you to have 93% of cash in circulation outside the banking industry. But then it's an opportunity for you as a fintech. You can begin to build, come up with business models to address that gap, right? To address things like the gap in financial inclusion. So, but then you must, align with this vision first, right? As we speak, we have, I think, the CB, right? Committee of E-Business Heads. They're already talking about the CBN Payment System Vision 2030. So you can actually be part of that document by paying your voice to it. Now, it is only when we have this kind of situation, right, that you begin to pattern your operations as a fintech to align with the direction of the regulator. So maybe I should stop here before.
Yes. Thank you, Efe. Thank you for that. So that we can allow Quintin also make his contributions. Are you ready? Quintin, can you hear us?
Definitely, I can hear you.
Excellent.
Quite interesting engagements there by the other panelists.
All right. So if you listen to Efe's response, he did talk about some technologies that are available, obviously, to fintech community. But my question to you will be, without, overspending, if you like, on technology, how can fintech startups leverage on innovation to actually put, systems and structure in place that can help them, minimize costs while watching, cash flow and profitability?
Yeah, definitely. No, I got your question right. So what happens with the startups is that most of the time, people want to center their ideas in isolation. We want to operate as in our silos, if you may. So that in the process becomes very expensive because the obstacles that you face are the same as your competitor or the other guys that are in your same ecosystem. So just going on and about and doing activities in your own silo there is just expensive. So silos are expensive. Then when we move into Am I audible?
Oh, okay.
Am I
We
audible?
can hear you. Go ahead, please. Yeah,
All right, all
we're
right.
with you.
Yeah. Then when you go to the cash flow, we need to understand the basics, right? So what exactly is the cash flow? So the cash flow is essentially a product of a balance sheet and a profit and loss. So a profit and loss is driven by the model, as one of the panelists did say. So if you have a strong, solid model, and then you guard against your costs. So how do you guard against your costs? It goes to talent, understanding how to manage your talent. In tech companies, your biggest cost usually is around your talent. Then number two, it's also about minimalization or what you call efficiency. So you might find out that you go out, hire a fancy building in the central business district, or you go and buy it with those investor funds and stuff like that. So you find out that you've used funds that are not yours to do something that would not be deemed value, if you may, to the business. So those are some of the things that you should closely guard against. So that will be your P&L. Then on your balance sheet, you have to make sure that the models that you do, your P&L, they should inform your balance sheet in a sense of your accounts payables and your accounts receivables. So if you have your, say, your suppliers, right? You have to minimize the number of suppliers that you have as a tech company. So you might find out that the model that you are doing, say you are working with a bank, for example, why do you have to offer a bank a service and then in the process bill them? Why can't you include, do a billing model such that immediately when the service is done, your funds are paid immediately so that you reduce the collection risk and stuff like that. So essentially, that's what you need to do. Do not work in silos. Go to someone, attend some of these fintech where we share, commonalities, and you get to pick, you get to understand what exactly are the challenges, what has someone gone through. And I can tell you something. I always tell people that, you don't have unique risks, right? Risks are just a pool of risks. So if you go and sit and understand and become part of networks and understand what's going on, just deep dive into the fintech world and understand what's going on, you'll find out that the problems or things that you perceive as challenges and stuff like that, they are covered somewhere else. Then I think a colleague of mine did talk about the regulation as well. So the regulation and the supervision, they're usually slow because they follow a longer process. So I think the fintechs as well need to be, as we are doing these creativities and stuff, we need to be very mindful of regulations and governance. I think one of the first panelists, when when we talked about strategy, she's number one, corporate governance. Get that right. Once you get your corporate governance right, where you have the right talent, you have the right resources, you are able to navigate through some of these regulatory and supervisory bottlenecks. Thank you very much.
Thank you very much, Quentin, for those comments. I mean, I'm so glad you touched on corporate governance. It's very key, I believe, in this game. But let me ask you a further question. Well, not a question, just to give you the opportunity to, give us some references or a case study of Botswana. I'm 100% that in Botswana you have, a lot of fintechs, because this is an African, in terms of the context. What is the experience of Botswana that you can share with the rest of Africa with respect to how fintechs are navigating this new world order when it comes to funding or the credit crunch? What are they doing to be able to manage profitability and cash flow?
Yeah, thank you very much. I think you would want to appreciate Botswana as a country to say, in terms of prudence, when it comes to the macroeconomic environment, I think they've done very well. So what happens is that fintech here in Botswana, I think like maybe elsewhere, it sprung off collaborations with the banks. So most of the annexures were connected to the banks. And then, banks were the huge ultimate customers for these fintech projects. And then as we grew into the mobile money environment, that consumption, I think it was able to sort of spare the growth that we have seen with the fintechs around. And then also what has happened is Botswana is relatively small. I mean, when you compare it to Nigeria, it's way relatively small. Maybe just to give you background as well about myself, I've been a finance manager for Cellulant. I think Cellulant is there in Nigeria. It's very big in Nigeria. So what I mean, when you sit down with your collaborators in Nigeria and Kenya, you realize that okay, when it's all said and done, Botswana is small relatively when you look at the population. But surprisingly, when you look at the economics of it, it becomes very profitable because the products here are very expensive. So which means, for example, if you are doing a $1, if you are making a $1 profit on one customer in Nigeria, in Botswana, you're making maybe $10. You understand? So that's what has sort of sustained or improved the growth of the fintechs here. So the fintech products and the associated products are quite expensive. The market, as small as it is very qualitative, if you may put it that way. So that's how sort of the fintechs have managed to, stay on top and manage to fight for their lives in this market.
Right. Thank you very much, Quintin. We're going to just, have another round now, a final round, and then we can start wrapping up to close. And
So
at this point,
pardon me, sir.
yes, please.
May I interject? I'm on your right.
Yeah.
In case we want to ask questions, can we
Yes.
take those
Okay.
questions and then use that to wrap up the last round because we have about 11 minutes.
Do we have questions in the audience? Yes, we can do that if we have questions.
Okay, we have 2 questions, sir.
Okay, let's go on.
So we can include them and then wrap up the session within the next 10 minutes. Thank you.
Right. That's a nice way of telling us we have 10 minutes, huh?
Okay. Good afternoon, everyone. My name is Eze Chukudi. I work for Advantia. We're a software development company. My question is, what I realized is between when the FinTech conversation started some years ago with the NFW week and some other programs like that, we've seen collaboration increase. It's now quite seamless. We're able to do so much more. But another challenge that we're currently having in the Nigerian financial space, and why I think that cash would continue to be king for a long time, is the issue of trust. And this trust boils down to infrastructure. Some days ago, some banks, I would not mention names, I had friends who could not access their salaries. Now there's my mechanic, he went to one of the top 10 banks. I think he gave maybe an intern his card or something. They found out that it was an intern that took the money. One of the interns that the man spoke to in the bank, help me do this. Till date, that man does not have his money yet. And then we have so many cases. Now you're using USSD. I did USSD some days back. If the transaction fails, I'm usually scared when the network, if I'm trying to do USSD, I need to be somewhere where the network. So I think what we need to do is what we need to speak about.
No, I think you should go to your question.
Yes. What are we doing? What are we doing concerning infrastructure in terms of reliability with transactions?
As we take that, I think if you want to try now, someone spoke about collaboration with respect to the infrastructure. I think was
Mr. Denka, pardon me, sir. May we take all the questions so that way we don't go back and forth. There's one. Yes, there's 3 here.
We won't take 1 and 2.
Oh, just 2 questions, sir. Yes, thank you, sir.
So let's take the second one.
Thank you so much. My question based on Mr. Binga. Ms. Lulu and Ms. Fola said something about corporate governance and companies model. As a new business individual starting up a business, you've analyzed and you've concluded on your company's model, but you're not into your corporate governance is not that. So my question is is it ideally advisable for a business, a new business model to go into partnership with others because to promote your product? Because right now, to make people want your product, to create a, I mean, to find a want needed by people right now is very hard, and you likely I am creating your own product and you want people to like want it, so you feel like partnering with someone already in the business world, like making a partnership with them could promote your business. So I was like, is it advisable to like go into partnership straight before you go into solo, before you go solo, or maybe in the future you still end up in a partner, or it is something bad, like the pros and cons, if it's actually bad or
Thank you
something
very
good.
much. Thank you.
No, I think we can.
I think I was the one. I talked about business model and I talked about corporate governance.
Yeah.
So, but his question is, you're asking, is it okay to just directly go into partnership or do your own thing?
Yeah.
Whatever works for you. At the end of the day, it depends. Like I said, if you have a product that you're solving a problem, you understand, you can go on it by yourself, because if your product is needed, believe you me, you can achieve a lot. However, when you go via a collaboration or partnership, you reach there faster. But so it depends at the end of the day on your product and what you're trying to achieve, your goals, your objectives. But either way, it works. So if you know that you want to get there faster and you want to make and there are people already in the industry that have done things, or they are in areas, or where you want to go, it's very okay to go directly for collaboration and partnership. So it depends. You just have to balance it out.
Temitope, I would like to add to that. Go ahead.
So I think that question somebody actually asked me once before, and my take on that, and I agree with her, but please, you have to be very careful, because the Nigerian space, if it's spoke on regulation, if you are not careful, you will make one mistake and you are dead in the water before you even start. So it's where collaboration comes in, or where collaboration helps you, is that you're looking for somebody in the business you can trust already, a company that you think can take you to the next level. The idea is they already have the licenses needed, because you'll be amazed at how many licenses you need to operate in this country. It's confusing and it's amazing. But if you go into partnership, the company, so say, for example, you want to do something that has to do with payment, you go into partnership with a fintech that already has the license to do it, because if you don't have a license, you will get away with doing it for a while. But the day they will catch you, all the money you made and then some, and then your future, you pay as fine. So you have to be careful there. But please, before you go into collaboration, make sure you've dotted your I's and crossed your T's. You know what you have. You're sure of the product you have. You make sure that you have a lawyer or whoever would ensure to take care of your side. Because I think the problem you are trying to highlight, trust, how easy it is to be swallowed by the person you're going into collaboration with. Trust. And if they see that you are not sure of yourself, or you don't have a proper document on what you want to do, it is so easy they will ridicule you and you will lose everything. So please, I advise collaboration, because you do not have the resources to start a business in this country. Trust me, is for even people that are already there, it's hard. So please go into collaboration, but make sure you have your documents into your lawyer, checks everything. Do not sign any contract with anybody on collaboration without first taking it to your lawyer.
Yeah. All right. Thank you very much, both to Lola and Temitope. Benga, do you want to respond to the first question on?
Yes, I think it's important to note that infrastructure is almost always going to be a challenge. There's almost always going to be room for improvement, right? And for the fact that you've identified that is a problem, that's how a business starts. The first thing you need to do is to identify a problem you want to solve, right? So you've identified that there's some form of fear that creeps in when you try to use some applications or some concern that you have. So that means that there's probably an opportunity in it. It doesn't mean that there's an opportunity, but there's an inkling of an opportunity. So you can start to explore as to whether or not there is something there, right? So for those kinds of scenarios or those kinds of situations, it's important to then look at what are the various components of that problem that you can solve. It might not be that big problem, but a component of it that you can really latch on and take advantage of or create a solution for. So for every problem, I mean, entrepreneurs are happy about problems because that is what they like to solve. So if you really do have it in you, right, I think it's something you should pursue. I mean, that's an opportunity that you've already identified, and you can probably start to brainstorm around how to solve those kinds of problems. You never can tell. You might be the next. I mean, we have several members who are doing stuff within the fintech NGR who are also solving problems. I think for us in our local context, you will see that a lot of people are also trying to move towards localizing payments and trying to make sure that their expenses are sort of localized. People want to pay less in dollar and pay more in naira or try to reduce those costs. So maybe for you, it's an opportunity to then say, rather than pay this cost in cloud expenses or pay this cost in terms of, because by the time you check it, infrastructure is, I mean, it's the server, I mean, all those things are the components of the various things in the infrastructure. So you need to pay attention to.
Thank you, Benga. Thank you very much. Stephen, the regulator, is here to, regulate.
Sir, you know I'm your boy. I'm at your service, sir.
Him to chase us out of here. I'd like to take 1 minute each for each panelist to give us their parting thoughts and just wrap up. 1 minute. Yeah, please, you can go.
Okay, I think final comment from me, right, is there is a lot of opportunity, right, in the African market, even in the Nigerian market. There is still a lot to solve for. There are infrastructural challenges, there are business challenges, there are several challenges that we need. I mean, regulatory, KYC. I mean, if you talked about some sections in the PSV that you probably wouldn't have paid. Everybody want to work in payments or fintech, right? But what about if we start to think about it as embedded finance, right? Like one way or the other, people will pay or they will need to pay for services. Whether you're solving a problem in health, I think I will stop there. Thank you.
Okay, I think that regardless of what's happening today with the crunch, I think every startup should still look at the business. I mean, there's the seed stage, there's the growth stage, and there's the growth stage and the maturity and exit stage. Please go for it. There's a crunch now, but the boom will come. So I think Nigeria has enjoyed the fintech space and will continue to enjoy it. And I encourage everybody to do it.
Thank you very much. I guess I can make some comments here at this point. And my comments will be, or my advice will be for startups to watch corporate governance. The governance is very important. I mean, you can do all the profitability and cash flow management that you want, but if there's no corporate governance, I'm not sure that you can succeed with all of that. Thank you.
Thank you very much. I think to summarize, what I would say is, right now with the crunch, can we as startups consider other sources of financing? So for example, consider sourcing finance locally. Local finance, typically they have a long-term view of things. So they're likely going to stay with you for the long term as against the VC. When you do get that funds, it's very important that you do not lose sight of cash flow and profitability. So starting as a startup, you don't have to have a big office, a very beautiful office. You don't have to have a therapist on site. It's what the social media people say you should have, but you really don't need that. So do not overhire. Consider all those things to save yourself on cost. Things you can use AI for, use it. For your customer service, for anything you can use AI for, really. Consider hybrid. So you don't have to have everybody in the office all the time. You don't have to even rent. Rent an office workspace.
Yeah.
So all those things, if you put them together as one, you end up having a situation where even when you have the barest minimum form of funding, you are able to stretch it for as long as you can stretch it till the VCs wake up and come back. So please, growth at all costs was the past.
Yeah.
Now you have to think about sustainability, profitability, cash flow.
Thank you very much. Efe?
Okay, so for me, I'll just say that as a fintech startup, prioritize profitability and cash flow. And even though we have venture capital crunch now,
when your proxies of value are very impressive, those venture capital investors will come looking for you with the millions. Thank you.
All right, thank you very much. I believe we've done very well on time. We're right on time. Don't mind the right thing flagging at the back. So on that note, I'd just like to say a big thank you to the panelists, Benga, Lola, Temitope, Efe. And I do hope that our audience today have been able to take, in some points that can aid your business. Have a good evening.
Thank you very much. Please, can you put your hands together for this panel? Fantastic. Please, can you come up for us to have a group picture in front here? The next session are 2 items before we call it a close for the day. Can I have the president or the CEO or any member of the board of trustees to please join them up as they take this picture for posterity and for record purposes? We're having a workshop that is holding in 2 rooms upstairs. The workshop is going to run for about 30 to 45 minutes. And then we are back here for the raffle draw. I understand that the first prize for the raffle draw is a fantastic mobile phone. You know what inflation has cost, as a matter of fact. Thank you very much, Mr. Adeyinka Adeyemi, the CEO of Intermark Consulting, for moderating this session. Thank you very much, Temitope Ajanaku. It's great to see you, the Group Chief Finance Officer for Express Payments. Of course, Benga Pasada, Managing Director of VFD Tech Limited. Thank you very much. Efemena Oge, Head of Partnership at Morning Point. And of course, Lola Agbebi, MD Nigeria for Network International. It was great having you guys. And of course, we have Quinton all the way abroad joining us virtually. Thank you, ladies and gentlemen. And my assistant by the name Cyprian, we approach each of you and then let's keep this relationship going. So at this point, can I have the ushers? We have a workshop going on in 2 different rooms. Room A, we have BC Adeyemi, CEO of DCLL's Corporate Services Limited, who is going to be taking us on a workshop on strategic planning, operational efficiency, guide to corporate governance, documentation, corporate governance, and regulatory compliance. In Hall 2B, we have Tomilola Tobun, Senior Associate for Aluko and Oyobode. She's taking us on risk management, operational excellence, guide to corporate governance, as well as documentation and regulatory compliance. So please, the ushers will direct you to the 2 different rooms upstairs there, A and B. When we are done with the workshop, please come back to the hall here. We have the raffle draw to take. For you to participate in the raffle draw to win a mobile phone, please download Slido app. Slido is slido.com. I'm very sure a lot of you will know it. Slido, that Slido is going to give you access to participate in the raffle draw. So please, Slido, slido.com, I believe. Slido, Sheung, is that correct? Or Slido, just go to Slido in the App Store and you download it. So please, ladies and gentlemen, do I have my ushers direct the delegates to the 2 different rooms, 2A and 2B. Make sure you register your name when you get there. And then by 30 or 40 minutes time, we are back here for the raffle draw as a way of wrapping up day 1. Thank you, ladies and gentlemen. Please, usher, direct the participant to where we will have the workshop, please. Carry your personal items. Your mobile, we want to win a phone, not a new one. Please, your laptops, your tabs, every material you need. All right, please. Thank you very much. Madam Temitope, can I have your card or number? That is my, no, he's going to accord you with that. And then I'm very sure I'm recognizing also let's hurry this up. I'll be back here in 30, 40 minutes time so that we can wrap up with all of this. Ushers, please, can you direct the delegates to the workshop halls, please? Ushers, direct the delegates to the workshop hall 2A and 2B. Hello, Sheung. Okay, not to worry. When we come back, all right, we are going to make that announcement again. And all the Slido, if there's a code, we'll communicate that across. All right, man. I'll keep in touch, certainly this time around, not till next year. All right, ladies and gentlemen, please let's go in for the workshop. I myself am going to attend the workshop. We won't just do MC and not gain knowledge. Please make sure you carry your personal items, your phone, your mobile phones, your handsets, your shoe, your bag, house keys, please. Thank you. Carry your bags. Uh,
Hello? Hi.
That's what happened was so all right. Ladies and gentlemen, we should be wrapping up. We're about to start the raffle draw to end the day with. Please, let's all get ready. Can we get the ushers to tell our workshop attendees to come down for the raffle draw as a way of wrapping up for day one? Thank you.